Thank you so much for joining me once again. My name is Ola Ibiwoye of Commercial Property Club. Here in Commercial Property Club, specifically here on our podcast, we'll dwell and dive into several aspects of income-producing property in commercial real estate. Today is another day in which we'll bring you vast knowledge, vast expertise, and we'll bring professionals on board, people that have really spoken about what they're doing and they're exactly doing what they talk about in commercial real estate. Today's aspect of things is in the apartment sector of things. We focus on several aspects of class asset apartments, senior living, retail warehouses, as well as medical building in income producing aspect of things in commercial real estate. Today, I have somebody that is seasoned, actually, is done it, is a professional in the aspect of investing in commercial real estate. Is the founder, the CEO of Elevate Equity. Now, I'm going to talk a little bit about Elevate Equity before I give you the biography of this particular person. His name is Derek Clifford. But Elevate Equity is practically a dashboard or a platform that's devoted to helping people to achieve financial independence, to build a passive income in the aspect of commercial real estate, particularly the aspect of apartment investing. They lay special emphasis on helping those who have full-time job. Talk about full-time job. They have the expertise to help people in that aspect of things. Their goal is to be a one-stop place of shopping when it comes to building equities. No matter where you find yourself or where they are, they bring people on board to build their equity. Elevated Equity acquires and operates multi-family apartment building, particularly the class of B and C aspect of things in emerging markets of the United States of America. And mostly this private firm also too, they dig into researching the markets. They provide education in terms of what they're doing, and also to not only in the aspect of people that want to engage in investing, but also to people that are also trying to get into the build business. So they partner with investors and brokers and bring on board valuable investment in the aspect of apartment investing. And Derek, who's the founder of Elevate Equity, is, I would say, a seasoned investor right now, has background in engineering from the start, and project management also too, but fully retired from his full-time job in 2021. I talk about success. Has fully under his portfolio right now an asset base of 400 apartment units. That's in the tune of about $50 million in under asset management. Is the founder and partners with individuals, companies, and what do? They buy into cash flowing multifamily apartment properties, specifically in markets like the Midwest as well as the South markets of the United States of America. Their goal is to focus on busy professionals to help them achieve the lofty goal of financial freedom through real estate investing. Can I say also too, Derek too is an author. His book, Part-Time Real Estate Investing for Full-Time Professional. It's a knowledge-based book that you need to get. Practically what he dives into is helping people understand how a busy professional can be an investor also to in apartment investing through the portals of passive income. And without no delay, I would formally introduce you to the founder of Elevate Equity, Derek Clifford.
Hey there,
Derek.
Ola. Thank you so much for having me on. What an introduction. This is amazing. Great to be here with you, sir.
Well, honestly, it's amazing what you've done out there, what you've done, what you've really accomplished in terms of apartment investing. We have to tell the story just exactly as it is. so that, you know, people that think, okay, it's this huge gorilla. Apparently, there are people out there that have done it, people like you. So tell your story, and how did you start in real estate, Derek?
Yeah, you know, we actually started 100% on accident. That's usually the way that most things like penicillin and a bunch of amazing things happen in this world. But what ended up happening, just real quick, is that my wife, she had bought a property in Washington State next to her university where she was going to graduate school about a month before the 2008 collapse.
Mm-hmm.
So she bought the condo for, I think, like $225,000 or something like that. And within 3 months, the place had gone down in value to like 90. So there was a ton of like underwater, you know, equity basically that she had in this property. And by the time I started dating my wife and getting to know her at this time, she was looking to sell this thing and to move on, right?
Okay.
Because she had got her residency already in California, and so she had finished graduate school, and the idea was to graduate from graduate school and then take the property, sell the property, and use the property to pay off her student loan debts. But it didn't quite work out that way, right? So what ended up happening was, even 4 years or 5 years after she had finished purchasing the apartment and then looking to move to the Bay Area or down to California, it was still underwater. And so both my wife and I, we couldn't write a check for this. Like, it was going to be a lot of money for us to be able to sell the property and continue to move. So the only thing that we could do was basically rent it out. And as we rented it out, it kind of solved the problem that I had in my mind, which was, how do I create some passive income to help me with my job so that I can retire earlier, right? And that was what was on my mind and how I was trying to grow. I was looking at, you know, the Dave Ramsey method. I was looking at stocks. I was looking at buying businesses. I was looking at bonds, all types of things. Okay. And so I found real estate. And as we were driving to California, you know, we got our first monthly rental paycheck from these renters that covered our bills and everything. And I thought to myself, man, you know, if this was something that we got into on accident, imagine what would happen if we really did this on purpose, right? If we really looked at buying rental property with the objective of doing this. And so that's kind of how I got started, you know, with single family homes, and eventually scaled up into multifamily.
Wow. Talk about, stumbling upon something that is you're not familiar with, and you see that, okay, you stumbled upon gold, like the 2 feet away from gold, and you stumbled upon it and found it and said, okay, I have to really pay attention to this. That's what happened.
That's right. Yeah. I mean, it checked all the boxes for us. So there was tax advantage. You're able to buy, you know, you have leverage. It's high returns over a period of time. It creates passive income. It was just perfect for me at the time. And so I just became obsessed. I just started like learning everything I could on Bigger Pockets and doing single family homes. And, you know, then, you know, back in 2017 or 2018, I remember being able to, so I was employed at a very high income, you know, position in the California Bay Area. And so I remember doing the math and saying, oh my gosh, with a single paycheck, I could have enough for a down payment on a house in the Midwest.
Wow.
And at that point, you know, then we just started really moving. And within about 9 months of me, you know, being ready to take action after this first house in Washington, we were living in California, renting, right? We didn't own a home in California because it was so expensive to own a home. But I was renting in California, and I was buying rental property in Indiana. And so I was buying on average 1 or 2 properties a month because of the incredible paycheck that I was given, you know, to work in the Bay Area. Okay. And soon, within 9 months, I maxed out my number of loans, because they let you go to 10 loans on single family. And then I figured, okay, what was the next thing to scale on? And so I went to multifamily and started to look at, like, you know, getting commercial loans that don't have that limit on how many loans you could take out. And then I ran into Vinny locally, who is one of our mentors. yeah, from there, I learned about raising capital from other individuals, and I wrote a book and just kind of went crazy at that point and started to really, really look at opportunities much, much differently from a more abundant mindset. And then
Yes.
that led to where we are today, where we're asset managing about 400 units.
Yeah.
And we were involved in the acquisition, the operation, and the disposition of all of them. So we're very active on every single one of those units.
Awesome. Talk about momentum. You exactly said something about stumbling upon what you never thought about. Then you took the bull by the horn by exactly pushing through. What is it about momentum in this kind of business that you can say? Because from what I can gather from what you just said right now, you stumbled upon, then didn't allow it to cool down. You took the momentum to the next level. I mean, isn't that what we all need to achieve our dreams, even whatever industry you find yourself? That's what we need to achieve our dreams, allowing ourselves to embark upon the fact that, okay, I have a momentum right now. Can I ride on that wave? Isn't it?
Yes.
Yeah.
I completely agree with you, man. And I think a lot of it comes down to the mindset behind it. Momentum is a big, big piece of it. I think, one of my strong points is consistency, being able to be consistent with the same activity over a long period of time. That's just the way my brain works as an engineer. So I'm very lucky in that regard that it's natural for me to set a goal and be able to set aside an hour a day, right, for many years or with no time limit, basically until I get to the place that I want to get to achieve a goal that I wanted to achieve. So the momentum is good because here's the thing. If you have the consistency piece down, or you have a clear enough vision to be able to want to be consistent to achieve it. Yeah. I so desperately wanted to be able to leave my job because it was very stressful, what I was in. So I know it's weird for me to put on extra stress on myself to get to do something on the side while I'm working a full-time job. That's an extra amount of stress, but it was worth it for me because it would give me an exit, right? Eventually. And I saw that exit so clearly and I wanted it so badly that the how became small in comparison to the why. And because of that, I was able to continue to keep the momentum moving. And one thing that's great about this business, Ola, is that I like to talk about Lego blocks, right? Because as a little kid, you can get these Lego blocks and you can create some amazing stuff, right? As long as you have enough blocks. And so the way I looked at it is, as soon as I got a block in my belt, right, and I could use it to help to build something like a castle or a moat for my financial future, right? I just got hooked on that. And so I just got hooked on the fact that getting one extra block, right, was like, yes, we won, right? Like we got something. And so it was these small little wins that really I attribute to the momentum, is that when you win in something small and you make an investment and you're watching your equity build and you're getting cash flow and all that, it got really addictive real quickly. And I was like, I got to keep going with this. So that's kind of how it all worked for me on momentum.
You never know what you're asking for. So you could get addicted to it.
Yeah, that's totally right. Yeah.
Awesome. Today, we've crafted out this topic about how to own passive income real estate investment as a busy professional, which I know you focus more on. Really, your niche is focusing on busy professionals. Let's just start from the little blocks, just like you illustrated earlier on. What is passive income in commercial real estate, especially the class asset apartment?
Yeah, I'm sure this is something that you know well. So thank you for allowing me to explain it to the audience. But passive income is the ability for you to build equity and income without you having to do much effort for it. I know it sounds like an ideal. It sounds like this crazy world where it's not possible. But generally, what it involves in our industry, because there are industries that has passive income, or at least claims to be passive. And, passive is a really funny word because nothing is ever truly 100% passive, because as an investor and an owner, you always have to be looking over how your investment's performing, right?
Yeah.
Even if you are so passive is kind of like this weird word that you got to be careful of. But what a passive investment means is that, in my mind, is that when someone makes an investment or partners up with someone like you or someone like me, right?
Mm-hmm.
They put their money to work, and we as operators get paid in equity to hustle and make that cash generate more cash for the investors, which is our passive partners, right?
Yeah.
So, for instance, a typical deal would look like this, where someone brings about $50,000 to the table, and then we pool that amount of capital up with other individuals alongside that $50,000 individual, and we as capital allocators and operators, we take all of those funds, which could be $1 million, $2 million, anything like that, and then use it as a down payment to purchase a property, a commercial property. And we operate it. And for that $50,000, like, you get anywhere between a 60 to 70 or even 80% equity on the building, right? And it's proportionate to who puts in that amount to make up the down payment and all of the capital requirements and, and everything that comes up that's needed to acquire and operate the deal successfully over a long period of time. And then over time, cash flow gets generated and equity gets built. And these passive income partners, they receive cash flow income. They get the benefits of a refinance if the property gets refinanced. And if the property gets sold later on, then whatever their proportionate direct ownership slice is, that is their also their reward for investing in the property alongside of this partner. So in a very real sense, partnering up as a passive investor with an operator means that you are owning a slice of a very large pie. Like, you're literally, it's just the same as if you were to go and buy a house yourself and then rent it out, right? Yeah. But in this case, you actually have like a K1, you get actual paper ownership of a very large apartment complex, right? That you can bring, and you get tax benefits. And there's a K1 that basically you can bring to your accountant that flows into your personal situation on taxes. And so that's a basic overview about how the passive investing works. And I'd be curious, Ola, if you have anything that you wanted to add to that as a seasoned investor yourself.
Yeah, well, you pretty much, round robin everything in terms of passive income. You define everything. I can't add any more much other than to say that, okay, it's a leverage kind of participation in which that, okay, you participate with something, for most especially for busy professional. You're caught up with day-to-day activities of some other aspect of life. But you have seasoned professionals like you and I that can help you do the job, just like you explained. So, yeah.
Yeah, one thing I have to add to that is that there are a couple of routes that people can take when they're looking to get into creating income with real estate. You can do it with single family homes on your own, where you're the owner, but I don't recommend that for many working professionals, just because you have a job, right? And you should be using your job to create unfair advantages over everyone else. And if you have a high salary, why would you take your time and take a high salary paying job and sacrifice some of your family time or anything else to try to learn another business, right? When maybe you like what you do, maybe you don't like what you do, but you get paid very well. Why don't you pay someone else who has that expertise, and then you can learn over time which direction to go? So I don't recommend people do the single family route or anything else. I think there could be an argument to be made to joint venturing up with other individuals on smaller apartment buildings, but that takes a network. You have to be leaning into it, and you have to understand. You have to know the business too, and you have to trust another person to be able to, just be the one cash partner, right? Where you're bringing all the money, and then there's one other person running the building. So I think that being a passive investor in diversifying your $500,000 cash flow portfolio or $500,000 investment fund or something, or whatever you have available to invest, by spreading it over a bunch of different investments with different operators, it's a great way to diversify yourself instead of putting all of your eggs in one basket or trying to do it yourself. So that's just my thoughts on that.
No, absolutely. Those thoughts are quite valid in the sense that, you leverage other people's skill set that are seasoned professional in what you would love to participate in, but you're a seasoned professional in another field, but you want your money. That's what I call making your money work for you through the skill set of other people that are experts in that particular industry. With what we're talking about right now in terms of apartment investing, seasoned professionals like you, people can leverage your skill set and what you do while they're still doing what they love to do. And just like you said, it buys them time.
Yes.
Time is valuable.
That's key.
Yes.
That's key, because if people are spending time, being active, let's say that they are working in their, like, let's say as an anesthesiologist or a pharmacist or someone, right? They're probably making anywhere between $100, $200 an hour at the top levels, right? Or whatever, if you're very good at what they do.
Yeah.
And if you work in real estate, right? What I recommend is you get to a point where you're making money without any of your time involved. But if you do end up working in real estate and you start out, you're probably going to be making anywhere between $5 to $10 per hour when you do the math, because you're going to put so much time into it. So why would you go from making $100 to $200 an hour in your pharmacy or in your medical practice or lawyer practice or whatever, right?
Mm-hmm.
And then sacrifice all of that time just to make $5 to $10 an hour. And over time, that'll increase, right? Because you get more skilled, you'll build more connections, but it takes a very long time for you to create opportunities to make it so that your time is just as valuable as it is in real estate that it is spent in your career. So leverage that unfair advantage that you've got, right?
Yeah.
Like use that high cash flowing job, get some overtime, do something else related, build a side hustle in that business, and then use it for a defensive strategy in creating passive income and tax advantaged ways with real estate on the side.
Yes, absolutely. I agree with you. Now, when you look at your meetings with several investors, who would you consider or qualify as a busy professional?
Man, that's really great. I think there's a lot of different layers, but obviously people who have what's called an accredited status is mainly who we look for. But there are some people who have had some experience in real estate that maybe don't meet their accreditation requirements, who are experienced enough to understand the risks, right? And we have to understand that. So people who are targeted or perfect, who are a perfect fit for this type of opportunity are people, that have sizable 401ks or retirement accounts, or have a lot of excess income and are looking for great places to put it, or maybe have a great stock portfolio, like a really big stock portfolio, and maybe want to start diversifying and thinking about, not just having all the eggs in one basket, but start getting a bunch of different asset classes. So it really depends on the individual. Even those with really high incomes that don't have control of their spending or need help with that, like that's also something that we can help with, and in helping them build some financial discipline to have a purpose of why investing is so important. So we've had experience across working with all of these investors in every single aspect of it, and those are kind of the general categories, right? There's the accredited, there's the sophisticated investors, and so basically we're willing to work with anyone who is very serious and who really wants to take the time to start building passive income on the side while they're busy.
Okay. So in your travels, these typical busy professionals, how do you help them invest in apartment investments?
Well, I think the main thing is education, right? Because a lot of people don't even know, like it's really intimidating to think about buying an apartment complex, right? Like people think about the process of buying their own home and they're like, oh my gosh, I can't even imagine what it's like to buy an apartment building. So I think the education piece is important. And then the mindset, the inspiration, being able to show people that, you can do it. And if you're working with the right people who have already done it before, you got to partner up with them. And so I think when it comes down to it, showing people about the education, and then encouraging them to think bigger, think why, why try to purchase an apartment building, or why try to build some passive income on the side while building equity over time? Like, why do we invest? And really driving that home and getting to a point where, people are comfortable and understanding what it is that they're investing and how it works,
Okay.
and why it's so superior to other asset classes out there.
Okay. Awesome. Awesome. Education is key. We all know that in this particular aspect of things. So in your apartment investment projects, from your experience in the past, can you tell us how you would normally position your asset that makes it generate passive income that allows you to make good returns for your investors?
Yes, great question. So, first I have to preface all this by saying that I've learned everything the hard way with my own money. Doing
Talk
stuff
about experiences, huh?
Yes,
experience
that's
is
right.
a good teacher, huh?
It is. Oh my gosh, you have no idea. So I've done everything wrong that you possibly could, and I've learned from that, and it's become part of our playbook that we use today with our partners. But basically what we like to do is we like to find properties that have a value add component, because in commercial real estate, if you're able to boost the net operating income of the building, that is the value of the building essentially, right? There's other things you can do, like you can change the cap rate and stuff like that. But generally we like to look at a way to say, okay, there's a property here that's not operating optimally, and that's an opportunity for us because we can go in and increase the NOI, or the income minus the expenses, the operating profit, right, that comes in from the property. We can either charge higher rents or we can have lower expenses. And so if we can build a delta from what the purchase price was, how it was operating at purchase price, to where we're running it, either by getting higher rents or operating lower or doing both of those, then that's a way to instantly add value, right, for our investors. And so that's what we look for. We do dog parks, we renovate units, we build curb appeal. We look for efficient property managers using our boots on the ground contacts and connections in that market. And we do very conservative underwriting. That's just one of the things that I do as an engineer. I do it all, right? Because I've seen it all, and I've made mistakes, and I've burned myself for not having the right type of underwriting in place already with my own money. So I take all those lessons and all of those concepts and put them together when I find a good offering. And then that's one way to add value for investors, is buy a property on the cheap, add value to it with investor capital, right, from the beginning, and then operate it well for a couple of years and refinance, right, pull some capital out, give some initial money back to the investors, and then continue to operate it for the next 3-4 years, at what point we would sell when the market conditions are favorable. And then, we'd be able to essentially get close to doubling investor money over a period of 5-6 years.
Wow. Awesome. I can but to visit this. You talked about learning the hard way. Which one project are you going to refer to that was learning the hard way? Can you give us an insight into that?
Yeah. So there's one property that we had that was, obviously I've learned everything from, a little bits and pieces from each property that we've made, and we still learn,
always
right?
There's always just that one property they say, no, I'm not going down that route again.
Yes. So we still own this property to this day, but this one property we bought, as it was an 18 unit with 5 commercial spaces on the ground floor, for like retail, right? And so we bought that in Indianapolis back in 2018. And we knew it was going to be a very heavy rehab project, but there was so much going on there. We had to kick everyone out of the building. This is how you know, Ola, that this is a bad property. We were under contract with this property, and when we were under contract, which is only like 40 days or something, it was a really quick turnaround because it was a wholesaler who was moving this for us, right?
Okay.
We were contacted by the broker, and the broker said, hey, this is a really weird request, and I've never had this before, but the seller is asking for a $3,000 advance on your deposit, like an increase in advance right now on your deposit, so that he can get a heater installed for one of the tenants. And that should have been the first red flag, because usually that's something that an owner just needs to take care of, right? Like you just have to do that. But it let me know what type of situation the seller was in and how poorly they were managing this property, at least looking backwards, right? And that would have been a huge red sign. I would have probably backed away at that point, knowing what I know now. But we ended up moving forward on this thing, and like I experienced everything wrong on this one, Ola. Like my my partners were not in alignment with me, so they flew out to Indianapolis and they fired my property manager without telling me, right?
Wow.
And then after that happened, like we had a loan breakdown. We had to raise capital. We had to actually ask ask people that we knew in person to lend us money until we could get to a refinance situation to pay them back. And we just barely made it. And we're still like, there's a lot of conflict at the partnership level. We had one of our contractors, like this partner that flew out there, hired someone from Craigslist, found them on Craigslist, brought them on property, and then that person held one of our tenants at gunpoint to get them out. Like police at our property. We had the roof breaking, like the roof fell in. We had structural problems. Like everything wrong happened on this property, right? And somehow we're able to keep it. And at this point now it's cash flowing. And that's just a testament that if you stick with things in real estate, just like in any business, it's very forgiving. Our industry is very forgiving. You just have to, if you're ever in a situation where a property is not performing, you just have to hold it for longer, right? And that's the very fortunate situation that we're in the United States, because there's more population and more demand in the US than any other country. So that was kind of a nightmare property. I don't know if you want me to go more into this, if you have any other questions, but man, it was cut my teeth, man.
Thank you. Thank you for sharing that particular experience with us. Sometimes, things seemingly look smooth on the surface, but I'm glad that you can show people that, you have battle scars that you can show that indeed there are some of those properties that, would have red flags. And that's the word, red flag. Once you see the red flags, something unusual, something that seemingly flashes itself as this is not normal when it comes to a property, you examine it more, and you're lucky that you moved ahead and actually break even with the property. Some investors are not that lucky, but ultimately it's an experience that I'm glad you shared with us concerning that particular investment. Now, looking at go on.
Yeah, one last thing I was just going to say about this is that it was also an exercise in mindset, because we almost exited twice at a very big loss, right? We almost lost all of our money. But the thing is that it's a mindset thing. Like I was talking with my wife, and she's been the source of great strength for me, obviously. And she's helped me keep the right perspective. And instead of like running away from the problem, having to become a different person to tackle the relationship problems with my partner, that was a lot. So I learned not only a lot on this property from a property standpoint, but also as an individual, an investor, and a business person as well. So that will happen, man. And not everything, like real estate is a business. And until you become an expert, you will have problems. You will get bounced around. Like it's just like any other business, right? Like there will be issues.
Yeah, absolutely. Talking about your experiences and how you bounced back, you had Sophia be a big supporter in all things. That's Derek's wife. Actually, she's also too a big participant of Elevate Equity. And going forward, passive income generation in class asset apartment. Sometimes people are not that knowledgeable when it comes to the aspect of class asset apartment. Most people are familiar with single family residence. Now, if I were asked to say that comparing apples, it's not, I would say, how can we say, okay, this is how I want to frame my question. Apartment asset or single family resident, which is preferable? You've done both sides. You've done both sides.
Yeah, it's really hard. I would say a single family home is good. Like it's absolutely necessary as a private residence. So, no matter where you are, you need a private residence to help build equity and control your expenses, right? And have a bank, right? You can use your home or your private residence as a HELOC later on if you want to make an investment or need an emergency fund. So definitely think that everyone should have a primary residence. That's the thing, as a house. And maybe even a second as a rental, right? Maybe you have an Airbnb idea, right? That's something else, right? Other than long-term rental. So I'm not an expert in that space, but I do recommend at least a primary residence. if you are very serious, right, and you're at a point where you're young enough in your career that you're hungry enough and want to escape what you're doing actively, then start with single family homes. Start investing there. It's going to take you a lot of time and energy, and you may end up getting like very frustrated. But for most people that I talk to that are looking for passive income because they're busy professionals, it's always a multifamily. It's always going to be multifamily or some sort of commercial property, just because the time thing that we talked about.
Yeah.
So again, single family versus multifamily, it's multifamily with a little asterisk. Make sure that you have a primary residence. And if you are a very hungry, motivated person who really wants to get your hands dirty and don't make too much capital, you want to invest your time instead, then single family may be a great stepping stone for you to get to doing some, multifamily on your own.
Awesome. So both has its own advantages, but ultimately
that's right.
Multifamily takes an edge versus the single family residence.
Because of the scale, because
the scalability,
you can scale and you can diversify yourself, right? You don't have to put all of your eggs, because if you have to put 25% down on a rental property, right, in order to buy it yourself, and that's like a $300,000 rental property, like you're putting down a significant amount. You're putting like almost $100,000 down into that. Whereas you can take that 100,000 and potentially split it into 2 investment opportunities in big multifamily assets across the country. So you just got to think about that. Plus there's the time and energy it takes to get that up and running for both sides.
Yeah. Awesome. The current state of things in the United States right now, when we talk about hikes and rates and strict lending facilities, which way forward for apartment investing? Which way forward?
So like I think rates right now they're very weird. I think sellers are still wanting very high prices and interest rates are still high. So it's because people are getting record rents, right? So sellers are like, I'm not motivated to sell. So what we're seeing a large drop in transaction volume over the last couple of months, right? And over the last half year.
Yeah.
But I think people that have the right debt in place, where it's a assumable loan, for instance, like the loan can be picked up by a new buyer. Those are properties that are actually transacting still, because it's the debt that's the main obstacle for new buyers and new investors to come in and take over a property, right?
True.
So I'm seeing that right now. It's a very interesting time. There's great deals out there, but generally things are cooling off. And so this is a great opportunity for investors to take a look around, start looking, educating themselves, right? And only being very scrutinizing of the best of the properties out there. And so only the best operators and the biggest operators are continuing to keep their volume moving because they have all those connections. But I just think now is a time to really be a student of the market and watch how things unfold. Because if you get yourself into investment now, interest rates are most likely going to drop, and so will exit cap rates, which means that pricing will go up, right? So that's great for business plans. So if you can get yourself into a property now or in the next couple of months or even a year from now, most likely there should be a favorable result, just because rates will be dropping and there's going to be more exit strategies once that happens. That's just my 2 cents, but I'm curious to hear what you think about that.
Well, I think, going forward, the rates will drop. That's what I anticipate. And just like you talked about, assumable loans, it's a good time to assume because of the good rates in the past. So coming into a deal as something that you assume also affords you, there's still a bit of meat on the bone, and you can leverage at the back end. When appreciation creeps in, you take the benefit of what the other investor has started with. So practically that seemingly looks like the best way to approach things right now. At least, one of the good strategies of stepping into a property right now because of the hikes in rates. And pretty much, what I think to myself. And so right. when you look at the way things are, how you started, there are people out there looking, subscribers of Commercial Property Club podcast, and which are newbies trying to see if apartment investing is for them. What are your best practice advice for newbies in apartment investing?
Yeah, great question. I think that getting really clear on your why is the main thing, because there's something that's clearly attracted you to get here, right? Like the people that are listening right now, there's something that's like, yeah, I think I need to do this. What I encourage you to do is explore what that is. Really start tasting it and feeling what that why is that brought you to where you are today. And what I want you to do is start thinking about like how to take action on this, because sometimes you just don't know what you don't know. And until you try something, you won't know you won't know what it's like until you try it. And so I encourage people to look at the why, come in with an open mind, right? Wow. And try to go into this business and this like venture trying to learn something, because that's what happened to me when I first started. Like it took me a year to take any action but then when I shifted my brain to going from I'm going to make $1 million off this first deal, like I'm going to have an incredible return. That was my mindset then. When I shifted from that to saying, no, you know what? I just want to learn something. Yeah. I want to diversify myself. I want to learn something. I want to see how this goes. Right? As long as you're working with someone like Ola that has the heart of a teacher, that's willing to sit down and explain to you how things are working and how things are unfolding, that's the true value that no one can ever take away from you, is the learning and wondering what it's like to build an apartment building. So really tapping into that why helps you, motivate you to take that action. So I think I'll stop there. I think you get what I'm saying with all this.
Absolutely. You just need it right at the point of importance, and that reminds me of Simon Sinek's book. Have you read it? Finding Your Why.
Yeah, and he has
finding your why. Particularly, just knowing why are you getting into apartment investing? Why do you want to do this? Making it the foundation, that's the driving force, So
he has a book also called Start with Why. I think that was his first book, is Start with Why, and then he has Finding Your Why as well. So
Finding Your Why, two of them. Great books. I've had opportunity. I've read both. Great books, and for everyone out there, if you want to, have an idea of finding your why or how it is, that's a great book to start with. And I will give you insight to quite a number of things, not only within the aspect of commercial real estate, investing in income producing property, but also to other aspects of life or entrepreneurship, wherever you find yourself. It's important to establish the foundation is, what is your why? Why are you trying to do this? And because that keeps you going. Keeps you going, the momentum that we talked about earlier on. Awesome.
Yeah. And I would encourage people to also share that with your spouse, right? Because then that'll give you accountability to your why, right? And it'll give you clarity.
Yeah, absolutely. When you have somebody that you're accountable to, it helps you. That's one of the boosters that you need to actually help you with your momentum, actually. Your book, Part-Time Real Estate Investing for Full-Time Professional. Tell us about it.
Yeah, real quick. The book is 2 pieces. It's the first half is mindset and why, just like what we were talking about. It's like, what to expect, why invest in real estate, just basically to try to motivate you and get you excited about the possibility of it. And then the second half of the book is like a playbook, like a blueprint for execution, whether you're doing single family homes or turnkeys. I don't recommend turnkeys, by the way, if you're doing single families, or you're looking for multifamily investments, or you want to do multifamily investments yourself. I have it all out there. And I have a great way of being able to explain this because I come from the perspective of being an engineer and also a project manager. So I'm giving you like literal like Gantt charts, like a schedule, a timeline of how long it took me to acquire my first rental property, and then how quickly the second one came, right? Like I'm showing you the timeline shrinking with each additional one, and all the activities it took to make that happen. And so it's a very tactical kind of thing. So I feel like talking about the mindset piece first is super important, because people can pick up something and then they won't stick with it because they don't have the why that gives legs, right? And then there's also the blueprint of execution, which is all the things that I've learned. So those two pieces are super important, and that's why I broke the book up into two halves. And so that's what it's for. It's for busy professionals. It's very visual. I have like 50 images in that book or something that I've done mostly all myself, because images work so much better than words do. And so I think that it's a very useful playbook that I had wrote personally for the people that were around me in my full-time job, asking me how I was doing all of this. So I had that particular avatar in mind while I was working a full-time job. And I was literally telling them, hey, I'm working on this book for you, right? And it started as an ebook, but then I was like, you know what, I should just publish this thing. And then I expanded it and really put a lot of time and effort and love into it. And so now the book is available on Amazon.
Great. So talking about education, which is part of what you also do in terms of coaching, your coaching program, for newbies out there that are listening, what does it entail?
Yeah, so it's more about if people want to learn how to either invest in single family or in small multifamily, or even do big multifamily, it's just a personalized one-to-one coaching package. We sit down, I guarantee that in 6 months, you will have made an offer or closed on a multifamily property within the 6 months. And it's just a one-to-one sit down every single week for a month or for 6 months. And we talk about everything, whether you're just getting started, you want to like learn a market, right? We explore markets together and talk about what's important to you and so forth. And then I give you homework to do. And so it's very much like a course, an active hands-on course, except it's one-to-one with accountability every single week. And that's very rare to get that one-to-one meeting with an actual active syndicator, because most people, if you sign up for coaching courses elsewhere, you're going to get one of their coaches or something, right? That you're not going to be able to talk with the actual founder of that company. You're going to be working with someone that they've hired. So it's very unique in that aspect. And I only accept the most serious people who really want to do this, because it has to be a fit, going forward, because I don't want to waste my time either. And you don't want to waste your time or money as well. Yeah.
Amazing, valuable moment we've had today, Derek. And as we round up, I would want you to, what is the one last thing you want to share with Commercial Property Club podcast audience before you go today?
Yes, last thing is, first of all, you can find anything about us on the web at elevateequity.org, or just look us up on LinkedIn or on social media. It's just my name, Derek Clifford. You can find me there. And the one last thing I'm going to say, Ola, is wherever you are, in whatever business you're looking to get into, you need the 4 C's. The 4 C's is coaching, consistency, connections, and clarity. And if any one of those 4 things you are really good at, for me, it was consistency, just showing up every single day for, many, many years. All the other 3 C's are going to follow suit, because you need clarity in order to find vision and purpose for why you're doing the consistency. You need the coaching to help learn from mistakes that you didn't make, right? Which is great. And then you need the connections as well, the network around that. If you lead with connections, if you start by going to meetup events every time there's one there, eventually that's going to impel you to have a really clear vision and then be a consistent action taker over time, and then pursue coaches. So same thing. If you go to coach first, they're going to force you to be consistent. They're going to force you to have a clear goal, and they're going to get you to have a network. So pick one of those 4 C's in any business that you're in and really dive into them, because whatever one is you go into that you're most naturally, adapted and naturally fitted towards, that's going to eventually get you to your goal. So just pick one and go to it. And that will work. And that's mindset. And that's consistency, and that's sticking with it, and that's having the right vision, and all of those things kind of fall out of that. So 4 C's, pick your 1 C, go into that, and expect the other 3 to follow after that.
Amazing. The 4 C's, pick one.
Yes.
And all others will follow afterwards. And you get all the 4 C's. Amazing.
It happens every time. With every
consistency,
entrepreneur, like yourself.
Consistency, coaching, clarity, and connection.
That's it. You got it.
Oh, wow. Amazing. Derek, you've been so amazing. Ton of value you've added to Commercial Property Club podcast today. Would love to have you some other time to break down those 4 C's. I'm sure you're going to write a book on those 4 C's.
I need to. Yes, sir.
Amazing.
Thank you so much.
Thank you so much
for having me on.
Anytime, Derek. Awesome. So awesome. Derek, all the way. Derek lives in the United States, but he's vacationing in Japan. That's what investing in apartments would afford you, the leverage and the time. And thank you so much for joining us today on Commercial Property Club podcast, Derek. We would love to have you some other time. Like I said, ton of value you've added to us today. Thank you so much. So
thank you.
Enjoy your vacation out there. Okay.
Thank you so much. We really appreciate it.
Take care. Thank you for joining us on Commercial Property Club, our podcast today. Like I said, we are all about thought leadership in income producing property. And that's what we brought today. You see, we promise and we deliver with experts, with people that are really playing the game in the industry. Thank you once again. Another time will be a time for us to share some more knowledge in income producing property here on Commercial Property Club podcast. Thank you so much. Enjoy a fabulous day.